Hello and welcome to what will be the first part of a multi-part video series titled Serial Trading. And just a little introduction here. So the whole idea behind this is that, in my opinion, there isn't really a place, or at least that I've found, where you can go to find information, basically everything together that you would want or need to actually put a decent trading system or trading career together. All the stuff I've attained is been haphazardly from different sources and then combined, by my own experience and trial and error. So what I'm trying to do is just basically make a shortcut for other people to follow. And the title behind, the channel itself, Serial Trader, and then of course serial trading. Well, performing a series of similar acts over a period of time. That's one of the definitions for serial. And obviously applying that behavior to trading, which is really, once you've developed a system or a methodology that you find acceptable and that works for you, and then it's just, and it might sound simple, it's just a matter of applying that consistently in a disciplined manner over a period of time, and that's essentially what trading is. All right, well, let's move on here to the next slide. Getting started. So, terminology. So stocks, bonds, commodities, forex, foreign exchange, digital assets, etc. Charting, trading platforms, recommended book list. That'll come later on here on a different slide. Having financial wherewithal to even do this or attempt this. I would not recommend, for instance, embarking on a trading journey with $200 to your name or something like that. To me, that's just untenable. Emotional control, there'll be some discussion about that. It's very important for this kind of activity. Perseverance, also very important. Touch on that a bit later. And then the concept of analysis versus trading, and the differences, but also the need to have analysis in order to trade, but you don't necessarily need to trade to perform analysis. So we'll just look at that a bit. Okay, next slide here. All right, terminology. So stocks or equities. So those are just shares within a publicly traded company. And there's, now, before I go on, this is just meant to be a rough overview or summary of these sorts of things. But if you want to there's all sorts of free resources. Investopedia, I believe, has a lot of good, source material to look at. Just Google it, you'll find it easily enough. But I will still go through this in kind of a summary fashion. So stocks, they're just shares within publicly traded companies. There's different classes of shares. Some shares give you voting rights within the company. Some shares do not. Some shares entitle you to the dividend payment. Some shares do not. But I don't need to get too much into that. But just so you're aware, you can certainly look into it a lot more. As I stated before, there's ETFs, so exchange traded funds, and that's basically a group of stocks or a group of equities traded under a single ticker, and it's more liquid than, say, a mutual fund, where a mutual fund you can only transact, I believe, on a daily closing basis. You can place a buy or sell on a mutual fund and it won't even fill until either the end of that day or the next business day or whatever. So they're not a liquid real-time trading instrument. An ETF is, and there's different themed ETFs. There's sector-specific ETFs. There's even strategy-specific ETFs. So lots to learn about there if you're interested. So there's bonds, and obviously the inverse of bonds is interest rates, or I should say the inverse of bond prices is interest rates. So a bond is a financial instrument where the issuer of the bond is promising the buyer of the bond a certain amount of capital upon maturity, and also a certain amount of interest paid leading up to maturity. Okay, and there's different terms for bonds. There's short-term bonds like 2-year bonds. There's 10-year bonds, 20 and 30-year or 30-year. Anyway, you can go crazy on bonds if you want to learn more about bonds. And then there's interest rates. And they have an inverse relationship to bond prices. You can learn more about that too if you want to, but I'm just trying to do a summary here. And there's commodities, so oil, natural gas, corn, orange juice, soybean meal, lean hogs, live cattle, etc. Lumber, right? I mean, you can go look at down the list of commodities. There's lots of them. Now, there's also some overlap here. So I believe the U.S. government considers Bitcoin, which a lot of people consider to be a cryptocurrency, or in my opinion, more accurately named a digital asset. The U.S. government classifies Bitcoin as a commodity last time I checked. So there's some overlap here between definitions and categories. Also gold. I mean, gold I think is considered a commodity in the United States, but a lot of people consider gold also to be a form of money. I include myself in that. I consider gold to be a form of money. And actually, up until 1971 in the United States, it was, what their money was based on, at least on paper. Okay, Forex, so foreign exchange. So basically, currency trading. So there's things like, there's lots of different currency pairs you can trade, but some larger ones. US dollar, Japanese yen, US dollar, Canadian dollar, US dollar versus the euro, and there's lots of others, of course. And typically, if you were going to trade Forex, you would be doing it through either CFDs, which are a contract for difference, or futures contracts, so currency futures contracts. There's also some ETFs or ETNs. Now, an ETN isn't the same as an ETF. It's an exchange trade note. You can also look that up if you want to know more about that. But there are these ETFs or ETNs that basically give you exposure to the movement of currency pairs without you actually having to, directly trade futures yourself or CFDs. And you can just basically buy it and sell it like a stock on a regular brokerage account or platform, right? There's digital assets or cryptocurrencies. Now, a lot of digital assets really are not currencies, and they're not trying to be, but this is kind of an umbrella term. A lot of people use cryptocurrencies. I'm trying to get away from that more now myself and just refer to them as digital assets because I think it's more accurate. But, Bitcoin, Ethereum, Litecoin, Solana, Monero, there's a lot of them. I mean, there's thousands of them, but there's only, I would say, a handful to really focus on that are large and liquidly traded. Okay, so there's that. Precious metals, gold, silver, platinum, palladium. There's, again, overlap between precious metals and commodities and money even. There's some overlap in these categories. Certainly you can look into that more. Then there's futures and options. So futures contracts are just derivative contracts that they're derivatives of the underlying for whatever the contract is for. So it could be S&P E-mini futures, which is a derivative of the actual S&P 500 S&P 500 index. There could be crude oil futures, which of course is a derivative of the price of crude oil. I could go on there. There's lots of different futures contracts, and you can learn more about futures contracts, of course. There are options. There are different types of options. So there are options on equities. So there are stock options and ETF options. But there are also index options, and there are options on futures contracts. So futures options. There's a lot of options and variations to learn about. But again, just a brief overview, not to get in too far into the weeds here. Okay, so that's some terminology to be aware of. Now, charting and trading platforms. So this is just me. So I use TradingView to do a lot of my analysis. It's free. I find it good to use. What actually attracted me to about it is just had built-in Elliott wave labels into its software. So that was good enough for me. There's certainly other ones you could choose from, but TradingView is fine with me, and there's free and paid versions. I use the free version. I don't see why you would need to pay. I mean, it works for me, right? Especially if you're starting out. Try and avoid paying for things you don't need to, especially at first. Thinkorswim. So Thinkorswim certainly has charting software in it, but it's also a trading platform that's linked to your actual brokerage account. And again, I like it for the options software it has. It's not the only good platform out there. It's just the one I've settled with. Certainly feel free to explore different ones. Interactive brokers. Now you can do some charting on interactive brokers. but I primarily have it just for an order execution platform, primarily for futures trades. So that's the only reason I have interactive brokers, because the where I am, the ability to trade futures does not exist on the Thinkorswim or the brokerage account that's attached to it. So that's why I have that supplementary account for futures trades, just to execute. So for instance, I'll do my charting on TradingView or Thinkorswim, and then actually base an order execution off of that, and then just actually do it on interactive brokers, just do the order itself. And then others are out there depending on your location and circumstances. So depending whether you're in the United States or overseas or Canada, that's going to impact what options you have available to you as far as platforms and brokerages, etc. All right, a book list. So as I go further into these videos, I'm going to go through a lot of concepts and try and go deep on them. But I'm just going to share a list of books that I found helpful and try and, at least for some of them, give a bit of a description. So the Elliott Wave Principle by Frost and Prechter. So that is kind of like the go-to book for learning fundamental Elliott Wave patterns and rules and guidelines and all that. It's a good reference book even after you've read it when you're still learning. The Visual Guide to Elliott Wave Trading by Gorman and Kennedy. So that is more so trying to build some trade setups based on Elliott Wave patterns. So it's a little bit more specific to trading. It's not just about learning Elliott Wave itself, but actually trying to apply it to forming trade setups. So that's good. And Trading for a Living by Alexander Elder. That's a good one. Come Into My Trading Room by Alexander Elder. That's also good. Now, this is a great options book here. Options as a Strategic Investment by Macmillan, Lawrence Macmillan. This is kind of like my options Bible. It's not necessarily, I mean, there is some of it in there, but mostly it's about just learning more than you'd ever want to know, probably, about options. And then there's also a book, Macmillan on Options by Macmillan. That's also good, but I would say this first one is the best if you have to narrow it down. Okay, Technical Analysis, a complete resource for financial market technicians. I think that's kind of a self-explanatory title. Technical Analysis of Stock Trends by Robert D. Edwards. And of course, you can pause this video. This is the beauty of doing this in video form. You can pause the video anytime and just, screenshot or write it down and, look at ordering some of these books later on. Oh, also, before I continue, some of these books are best done, in book format, hardcover, or not hardcover, but a hard book format, whether it be soft cover or hardcover, or even ebook, but an actual, readable book. And then some of these books I think are actually better suited to an audio version. So you can find either one of those pretty easily on Amazon or Audible or whatever. And actually, if I just go back, so Elliott Wave Principle by Frost and Prechter, that should definitely be in a visual book format, not audio. As should the Visual Guide to Elliott Wave Trading. Trading for a Living, Come Into My Trading Room. I would say those should still be, a readable format. Definitely Options as a Strategic Investment and Macmillan Options, that should also be in readable book format. As should this. As should this. Now, Japanese candlestick charting techniques. So if you want to know everything you ever want to know, and probably way more about Japanese candlestick analysis, this is kind of a go-to book for that. Contemporary Guide to the Ancient Investment Techniques of the Far East by Steve Neeson. So definitely a good one there. Here we have, and again, that should be a readable copy of that book. Encyclopedia of Chart Patterns by Thomas N. Bulkowski. Kind of self-explanatory title there. Technical Analysis for the Trading Professional by Constance Brown. Next slide. Intermarket Technical Analysis, Trading Strategies for the Global Stock, Bond, Commodity, and Currency Markets by John J. Murphy. Stock Traders Almanac 2015 by Jeffrey A. Hirsch. Now, some of these books might have updated versions, but you get the idea. Reminiscences of a Stock Operator by Edwin Lefebvre. That is a good book. I think one that you could certainly listen to and enjoy in audio format, although I think I did read it in an actual book format. But that's some storytelling and also some trading psychology lessons definitely built into that book. It's a good read, certainly, or listen. Super Trader, Expanded Edition. Make Consistent Profits in Good and Bad Markets by Van Tharp. That's a good one. Probably get the readable version of that. The Disciplined Trader, Developing Winning Attitudes by Mark Douglas. This is more into the psychological or behavioral aspect. Certainly a good book as an audio book. Trading in the Zone by Mark Douglas. More of the same, also great in the audiobook format. The Little Book of Behavioral Investing, How Not to Be Your Own Worst Enemy by James Montier. That's a good one as well. And then A Complete Guide to the Futures Market by Jack D. Schwager. I would get that in a readable book format. Okay, so that's a summary of the book list that I'm throwing out there for you. Now, by the way, I get nothing for recommending any of these books. I have no relationship to any of these people or any bookseller, vendors or anything like that. It's just purely stuff that I've actually found value in and I'm recommending afterwards. That's all. Okay, other resources. Trader's Classroom, delivered by Jeffrey Kennedy at Elliott Wave International. So you can go to the website, Elliott Wave International, and if you go to the Trader's Classroom, sometimes there will be a promotional deal where you can actually get the first 2 books, Elliott Wave Principle and the Visual Guide to Elliott Wave Trading. I've seen that before, where you can get those 2 books and a 3-month subscription for a pretty reasonable deal. So you can look at that. And I would definitely recommend Jeffrey Kennedy's Trader's Classroom service as a learning tool for your Elliott Wave education, if you will. Steve Bigelow and the Candlestick Forum, they have some good material. And we'll get more into that later on in these videos, but they're definitely a source of material that I've gotten some of my techniques from. And they have both free and paid content. I think I pretty much just accessed all their free stuff and got some value out of it. So you can find them on YouTube or their website or whatever. Spike Trade, run by Alexander Elder and Carrie Lavorne. This is also a good group to be a part of. Maybe you can do it's not that expensive, a 1-year membership or even just a trial membership to see if you like it. But there's certainly some good resources in there as well. And all this stuff, remember, I've actually tried myself, and that's the only reason I'm recommending it. Again, no relationship or benefit by making any of these recommendations personally. Okay, on here, financial wherewithal. Okay, well, let's talk about this. So the less you have, the harder it is to grow. So if you have a, $2,000 account, it's not impossible to grow that, but it's a lot harder, especially if you want to grow it to be anything substantial in any kind of reasonable period of time. You're going to have to just work. I wouldn't even say work harder, but you're going to have to hit some much bigger trades percentage-wise than you would ever need to if you started from a larger account, right? Desperation to be bigger can lead to bad decisions, which achieves the inverse. Which can achieve the inverse. So basically, if you just have a small account and you're trying to make it a big account in a big hurry, typically that kind of mindset or desperation will lead to just blowing up the account and having zero and starting back from square one. So the more you can start with, the easier it is to make rational decisions and still actually get some results that are measurable, right? Now, growing a small account is possible. It's just a lot more difficult, and the probability of you achieving that. So the probability of turning a $1,000 or $2,000 account into a $100,000 account, I would say, is quite low, even when you know what you're doing. But the probability of turning a $50,000 account into a $60,000 or $70,000 account in a not so unreasonable period of time, without doing crazy things, that's a much different story. Let's put it that way. Much more attainable. Okay. Now these are just examples, of course. Emotional control. So everyone, or almost everyone, minus psychopaths or sociopaths, and I think even in some ways those people have some sort of emotional response, although maybe extremely lacking. Basically, everyone feels emotions, right? Now, emotions get in the way of sound trading decisions. Emotions serve us quite well where we came from, living in a natural environment where there's wild animals threatening us and inclement weather and other humans to watch out for that might attack us. So emotions exist for a reason, but I'll tell you right now, they don't exist for any good reason when it comes to making trading decisions. In fact, they're your worst enemy. So knowing that, emotions can't be ignored, but must be managed and or controlled. Assess yourself regularly to make sure you are in a state of mind allowable for trading. So if you're feeling anxious, if you're angry, if you're overly tired, if you're just, you can't concentrate, any of these things, if you're not in a relatively stable, calm state of mind, and you're trying to trade, just kind of say no, stop, shut down the platform. If you're in a trade, get out of the trade unless it's in a good spot and you can, put a stop on it that'll ensure some safety. You don't want to be engaged with the market if you're not in full control of yourself or in good control of yourself. If you're not, so if you're not, stop until you are again. So yeah, wait until you're in a better state to resume. Also, things like regular exercise and, having a decent diet and other habits, that will definitely help you be more in control of your mind. And there's benefits, obviously, to all those things, just physically as well. Okay, so that's that slide. And perseverance. When you lose in the market, and you certainly will, it creates a mild form of PTSD. This effect will lessen as time and experience goes on. It can lead to lower quality decisions or even indecision. You'll be kind of gun shy after taking a loss, certainly right after you do it. So you may not take a trade that you should take because it meets all your criteria to take it. Or you'll just take a crappy trade, like revenge trading, to try and get the money back quick and just be even deeper in the hole. So again, when you're in that state of mind, you just you don't want to be in the market. When you win, there's a dopamine hit that can impact your decisions as well. So you feel good, you feel on top of the world. I'm great. I nailed that trade. My analysis was awesome. I'm the best. These are all natural feelings, especially early on before you get used to this sort of thing. It can lead to overconfidence, taking too much risk, taking lower quality setups, feeling, I'm on a run, I can't lose, kind of a gambler's mentality or mindset. You don't want any of that. If you feel that, so if you have a good win, you feel that dopamine hit, don't enter another trade again until you're calmed down, right? This effect will also lessen as time and experience goes on. So that's true. More time in the seat as time goes on and you perform more trades, and this just becomes more of a routine thing than an exciting, emotionally charged thing. These things will never truly go away. It'll always still hurt when you lose, and it'll always still feel good when you win. But the severity of those swings will certainly dampen as time goes on to a manageable level. Or if they don't, then I would say this is not a suitable activity to be engaging in for you. Okay, analysis versus trading. They are separate disciplines. For instance, you could be a great analyst and never trade, but you cannot be a good trader and never do any analysis. That basically just means you're blindly trading with no basis for your decision-making process. Of course, that's not going to work out. Certainly, you might get lucky or something, but over a sustained period of time and number of trades, that will never work out well for you. So analysis is needed for trading, but trading is not needed for analysis. You should keep a trading journal, okay? And things to write in the journal, perhaps the trade setup that brought you to a trading decision. So that would be your analysis leading up to the trade, why you entered the trade, what you were feeling when you entered it, and then, of course, what happened during the trade, how did you feel during the trade, and then when you inevitably close the trade or the trade is over, did it work out? Did you win? Did you lose? How much? How did you feel when you closed it? Why did you close it? And then you'll have just a catalog of all these things as time goes on, and you might start to see, you will start to see patterns in your own behavior that perhaps you can identify as being either good or bad and make adjustments. So there's definitely some truth to, if you measure it, you will improve it. And that's the idea of keeping a trading journal. And that's probably a good summary for this introductory video. And there will certainly be more to come here and go into a lot more depth, but we need to start somewhere. We need a basic framework, so that's what this was aiming to do. Certainly make any comments or suggestions as they may help shape the development of this video series. And that's probably good for now. All right, take care.